Hello and welcome to Trading 5 Talents. In today's video, I want to give the final results for the 5-1-2 Iron Condor strategy. Now, just to recap really quickly, the 5-1-2 Iron Condor strategy is set up like this. It's just your traditional Iron Condor, but there are going to be specific deltas that we're choosing. In this case, it's going to be a 5 delta for the short strikes. That gives us a 95% chance of profit. That's on the call side. Again, 5%. Referring to the 5 delta. Same thing on the put side, 95% chance of profit. This gives us an overall win rate, ideally, of 90%. So the 1 represents how many strike widths the wings are. So in the previous video about the 5-3-2 strategy, the wing widths were 3 strikes apart. In this case, they're only 1 strike apart. And so they both still have the 2 days until expiration. So this was the Monday, Wednesday, Friday. Now that SPY and Triple Q have added everyday expirations, that's going to change things a little bit. But I'm still going to test out the 2 DTE in some of my upcoming videos. So for now, this is the 5-1-2 Iron Condor strategy. And here are what the results look like. So each of these boxes represents an Iron Condor. The green shaded regions mean that's where the Iron Condor won. The red is where it lost, and then the white is when it was just a break even. So there was no profit or loss on that particular Condor. And you can see with a 5 deltas, the width of the Condor, the spread of the Condor, the profit range, if you will, is very wide. And you can see how tall these boxes are because I'm able to get these strikes so far away from where the current market price is because of the 5 deltas. And you'll notice that the boxes are overlapping as well because before the first Condor expires, I'm having to enter the one for the next expiration cycle. So that's why you see that overlap. I've been doing it arbitrarily around 2:30 p.m. Eastern time. And again, this is just because that's what I started the testing on in a previous Iron Condor strategy. And so I just wanted to keep that consistent. So around 2:30 every Monday, Wednesday, Friday for the following expiration. And you can see the majority of them are winners. There were 8 winners, 1 loser, and then 1 neutral. So this was on the Qs. That's where I'm doing the testing of the 5-1-2 strategy. And so let's take a look at the actual numbers for each of these. So before we get to the numbers, I do want to mention this one in red here, this loss. So the idea is to exit the Iron Condor when the short strike gets touched. In this case, it was the short call that was touched, and that's when I would have exited. And this was the day after the, I believe it was the CPI results were released. And that was the Thursday, and then the Friday it continued. And so I would have been out of that particular trade for a loss. And the way that I calculate the loss, I mentioned in the introduction of the 5-1-2 video, I'm using option strat to find out when the short strike would be touched, what would be the potential loss at that point. So I don't want these to go into expiration for a complete loss of my collateral. I'm trying to exit early and sort of mitigate the maximum risk. So let's take a look now at the numbers. All right, here's the 5-1-2 data sheet. You can see at the top graph that there's just a lot of little wins, and then there's this one major loss. And the total P&L for testing this for 10 trades was -$4. So there's a -$4 loss. Down here, the expected win rate was 90%, and this again was based on the 5 deltas. So 5 delta on either short side would give us a 90% win rate, expected win rate. And if we won 90% of the time, this amount of money, $6.80, and that's based on the average of what I'm selling them for. And then if we lost 10% of the time with this max loss here at $39.90, again, this is the average of the loss amounts in option strat if the price hit one of the short strikes, the greater loss of the short strikes. That would have been $39.90. However, I actually only won 8 out of the 10 times because one of them was just a break even. So that would have been the -$25.40. In actuality, it was -$4. So I didn't take quite as big of a loss as the math would have suggested. And I guess that's good. for this strategy. So I'm not going to go over every one of these trades. I just do want to mention, you can see what the, right here, what the entry prices are, you know, $7, $7, $6, $9, $7, and so on. They're all less than $10 for the entry price. So that's one of the drawbacks for this particular strategy, is that you don't make a lot of money when you enter this type of strategy. And if you're paying commissions or fees, then that's really going to take away, you know, half or about half of your profits. So this may not be a good strategy if you have to pay a lot of commissions. Currently, I'm on Robinhood, so I'm not paying those commissions, and therefore these $6, $7 trades are not bad because I can keep the full $6 or $7. I'm letting these go until expiration, and you can see the exit prices here are all zeros for when they go to expiration. When I get closed out early, based on Robinhood's early sellout process, you can see this one was closed out at $6. I sold it for $9, so I got a $3 profit. This one was closed out at $6. I entered for $6, so that was a break even. So that was that white shaded area in the previous graph. And then here's where my short strike got touched, and then I had to close out for 60 cents. So I lost $53 on this trade. And you could see that really sort of wiped out the rest of my wins. So that's not a good thing, but there are a few things that you can learn from this, or at least I am learning from it. So first of all, I reduce the risk to reward ratio. So you could see I'm making approximately $6.80, losing theoretically $39.90 when I do lose. So that gets our risk to reward ratio down to 6 to 1. Now, if you remember from the previous 5-3-2 strategy, which is right here, the risk to reward ratio was 7 to 1. So for every $16.20 I made, I had the potential of losing $107.80. Now, because this was a 5-3-2 strategy, the wits were 3 strikes wide on both the call and the put side. So you needed $300 in collateral. With a 5-1-2 strategy, you only need $100 in collateral. So you could do this 3 times, or you could sell 3 iron condors for the same amount of collateral as you could previously. So here, if we took $6.80 and multiplied it by 3, you could see the amount is $20.40 on average. So $20.40 compared to the 5-3-2, which was $16.20. You can actually make more money if you reduce the width of the wings and just sell more iron condors. So, and you can also reduce the risk to reward slightly from a 7 to 1 down to a 6 to 1. So overall, I think this one is going to be better than the 5-3-2 strategy. But the other thing that I learned from this is that, and I guess I learned it previously and I knew it previously, I just didn't do it because I wanted to see how it would test in this environment. And that is, you don't want to trade around these binary events like the CPI or the Fed speaking. So that's what this loss was. If I would have just sat out on that one, this would have been a much more profitable strategy. So let's take a look at the conclusions and also the comparison results. So the overall conclusion is that this strategy still needs some work, but I think we're moving in the right direction. There's still a wide profit range. The 5-1-2 has just a wider profit range as the 5-3-2, and that's because both of them are in the 5 delta areas. They both have a very high chance of profit, and with the 5-1-2 strategy, there is a lot less collateral that is required, so you could sell more iron condors and potentially make more money. So once again, with the 5 deltas, then you're going to have consistent winners, but obviously there are going to be some losers. Now, this is what really burned me in this testing, is that you got to watch out for that short strike touch. So you want to avoid the binary events such as these major macroeconomic reports and data that is coming out. The environment that I'm testing in is when the Fed is increasing rates, when the inflation data comes out, and also in the midst of the midterm elections here in the United States. So a lot of that is really playing into the macro economic environment that really is moving the markets kind of wildly. But I think it's kind of interesting to still test these strategies in that environment to see how they would test and how they would perform in high volatility environments. And once those factors are no longer part of the equation, then I think the strategy would do even better. So I'd like to see how much they're going to lose in the worst case scenario, because if it's not losing that much in the worst case scenario, then potentially it's going to really be profitable in the better case scenarios. So I need to work on the risk to reward ratio. 6-to-1 is still kind of high. You don't want one of these losers to wipe out 6 of your winners. So I'm testing some new iterations for the Iron Condor strategy that is going to be addressing that particular issue, basically making that risk to reward ratio a lot more favorable than what you're seeing here with the 5-3-2 and the 5-1-2 strategy. So you want to make sure you subscribe and turn on the notifications so you know when those videos are going to be coming out. So let's take a look at the comparisons between these first two Iron Condor strategies. Now I did do a third one. This was the 40-3-2 strategy, and I'm not really going to use that here because I don't really want to use that as a basis for the Iron Condor strategy development. I want to start with these 5 delta strategies because I think that's where we can really make something consistent and really profitable. So that's where I'm starting. So the first strategy I had this thumbnail. You can check out the video if you want to. And I'm going to compare the profit for every $100 of collateral used, the risk to reward, and then some considerations to keep in mind. So this was the 5-3-2 strategy. This was a couple of videos ago. For every $100, you're making $5.40. So that, 5.4% return on an Iron Condor. I guess that's pretty good. But because we were using $300 at a time, because this was a 3-strike wide strategy, you were making $16.80. The risk to reward, though, was not very good. It was a 7-to-1 risk. So 7 risk, 1 reward. Now, the thing I don't like about these two DTE setups is that you have the auto close risk on Robinhood. And so remember, Robinhood is going to auto close your spreads, including one side of a Condor, at 3 Eastern or after if there's a risk of it being assigned. That's when it starts, at least at 3 p.m. But it could occur afterwards, anywhere from 3 until market close. If it closes it, then you automatically are out of that particular trade on that side and you don't have control over it. And that's because of the risk of assignment on SPY. Now, if you did this strategy on SPX, if you're on Thinkorswim, the strikes are already 5 wide, so you're going to need $500 in collateral, but there's no assignment risk. And therefore, everything is cash settled and you're not going to have this auto close feature. It's either going to close profitable or it's not going to close profitable. But I'm trying to adapt it to Robinhood users and Robinhood option traders. So 5-3-2, that's something to consider. With this 5-1-2 strategy, that's this current one that I'm talking about. So now you have 1 strike widths on either wing. The profit for every $100 in collateral, on average that I'm finding, is $6.80. So we're increasing the profit, and now we're reducing our risk to reward ratio. So it was 7-to-1 and now it's 6-to-1. So that's a little bit more favorable, but you still have to take into consideration the auto close risk. That's the ACR, and then also the fees, because the profit or the premium being sold is so much lower. If you are paying fees and using the strategy, just remember the fees are really going to eat into your into your profits. So those are 2 things that you'd want to consider using this strategy. So once again, make sure you subscribe and turn on the notification so you can know when the next iteration is coming out. If you have any questions, go ahead and leave a comment down below, or you can catch me on Twitter at Trading5Talents. Until next time, trade wisely and take care.